Fannie Mae just announced changes that may or may not cost you extra money in 2023 if you plan on buying a house and go conventional. So first of all, this is effective May 1st, but in my 26-year experience, it always happens sooner. So just be aware, it's probably going to be rolled out in the next few weeks. Also, Freddie Mac usually follows suit. So I expect to see that announcement coming soon too. Now, the next thing that you may be asking is, Erica, who the heck is Fannie Mae anyway? It is a government-sponsored enterprise, also known as a GSE. And this is an entity that is partially owned by the government, partially owned by you, maybe in your 401k or stocks or anything you might own, that purchases mortgage loans from banks, credit unions, mortgage bankers, and guarantees and backs these loans on the mortgage market. For example, my loan was originated by me through Wallach and Volk, but it is actually guaranteed by Fannie Mae because I got the letter in the mail. It told me. The mortgages are sold as mortgage-backed securities to investors. So that basically helps the mortgage market get liquidity so that they can turn around and loan the money out to another homeowner that wants to buy a house. And it also helps to keep housing affordable. Now, Fannie Mae, what they did was they came out with these loan level price adjustments, just announced them. And you need to understand, I mean, literally, I just got the notice today. You need to understand, what does this mean for you if you plan on buying a house in 2023 and use conventional financing with Fannie Mae? And of course, usually your loan officer doesn't tell you it's with Fannie Mae. I happen to have this conversation with my borrower because it does impact you in certain ways. So I like to discuss this with people to understand the ins and outs. But basically, in a nutshell, Fannie Mae does what's called an adjustment or a hit. It's a cost to you, the consumer, based on credit score, your down payment, what type of loan is it, fixed rate, adjustable rate, what type of property is it, condo, investment property, second home, manufactured home, duplex, fourplex, is it a refi, is it a purchase, and do you have subordinate financing, meaning do you have a first lien and a second lien? And lastly, what is your debt to income ratio? Yep, all factors into your interest rates. This, my friends, is the reason why when I see people posting interest rates on the internet, I just have to giggle, because there is too many things that affect your interest rate specifically, such as the things I just mentioned. So what has changed? First of all, the government came out and they lowered the cost to lower FICO scores, which is great because, well, let's face it, the pandemic wreaked some havoc on some people's finances in 2020 and 2021 and leaking into 2022. So credit scores have definitely been going down a little bit. So this makes it more affordable for you if you're in the lower credit score bracket. It doesn't cost you as much. So that means your rate's not going to be as high, which is a plus. The other thing, however, that it did do was it actually is now going to cost you more money to buy a condo, a manufactured home, and the investment properties and the second homes are still nasty, by the way. It's just, they made these changes about a year ago and made those loans more expensive. But the bottom line there is that if you are buying a specific type of property, it's very important to have these discussions with your loan officer, if it happens to not be me, because it does cost you more money in certain ways, i.e. condo is not just going to cost you 0.75% in discount points or increasing your interest rate, but there's homeowners association dues and fees and other things that you need to be aware of as well. So it's very important to understand that interest rates aren't just 6.25% or 6.5% or 6.75%. There's so many different things that affect your interest rate on your loan. So it's very important to know what those are. It's more important to have a conversation with your loan officer and go through all of your various options, because sometimes FHA may be cheaper. Sometimes going conventional may be cheaper, and you need to know why you're choosing one loan over another. Make it a great one. And be sure to subscribe, share, comment, and become part of the Let's Talk Mortgage Pro group. We'll talk to you soon.